Good morning, everybody, and welcome. This is Tushar Chande. Welcome to a discussion of Nvidia earnings, which are due in about 12 days because today is the 13th of February, 2026. I want to talk today about the Popsicle Candlestick Pattern that's dominating Nvidia charts, and let's see how that'll influence what happens after the earnings. So let's get started. A gentle reminder that everything we discuss today is speculative and past performance is not necessarily indicative of future results. So earnings are all about what the street expects and what the corporation delivers. So let's look at that, get started. People are expecting a $2 billion beat on the prior expectations. So maybe earnings for the quarter somewhere around 65 or 66 billion. The EPS number is $1.52, but could go as high as $1.59, with a gross margin of, say, a little bit over 75%. So if it does better than any of these three numbers, the street will be happy in general. There's also the question of future guidance for the rest of this calendar year and the fiscal year. So for the first quarter, people are expecting maybe a guidance of 76 billion. And we know that in the background, there's the hyperscaler spending. They have announced something on the order of 650 to 660 billion in new spending. So lots of money available for the AI trade. And then there's a whole question of sales to China and chip sales of China, which Nvidia has not been using in their forecasts. And then, of course, the new chips coming online in the second half of the year. So there'll be a lot of curiosity about future guidance. So to understand what might happen, let's try to understand what happened the last time we reported the Q3 earnings. So that happened in November, on November 19th of 2025. The revenue grew by 62% to 57 billion. They beat the gross margin. They gave stronger than expected Q4 guidance of about 65 billion in revenues, and they pushed back aggressively on AI bubble talk. So the first reaction was that the stock was up about 5% after hours. So let's see what happened subsequently. So here's a look at what the chart looked like. On the left-hand side was what happened during the day. And then this is what happened after earnings announcement. So at the end of earnings, the stock was up maybe 5% or something, and looked like the reaction was reasonably positive. So now I'm going to show you what happened in the 4 days following the earnings announcement. So this is the bar for the earnings announcement, which includes the after hours action. The next 4 days, we had a pretty strong sell-off in the stock with high volume. So essentially, if you combine all those four bars, you get a high, a low, and a close. And essentially, I've converted that into a popsicle because it looks like a big red bar down and with a long tail or a longish tail. So if you look at what I've drawn here and you look at the popsicle, it sure looks like a popsicle pattern that evolved over 4 days of pretty heavy selling with volume near or greater than 200 million shares. So remember this popsicle pattern. So this is how the trading evolved over the next 3 months approximately. So this was the earnings announcement, that was the sell-off, that's the high and low of the range of that sell-off, the post-earnings sell-off. And essentially, I think of it as a popsicle because this range essentially froze trading action all the way through today and possibly going into earnings. So that's why I'm calling it a popsicle candlestick pattern, because the prices have frozen in their trading range, which was defined essentially by what happened in the 4 days after the earnings announcement. So that's the high right after the announcement. That's the low at the end of the selling. And pretty much after that, we've gone sideways and been stuck in this trading range designed or defined by those few days. Now, for example, here we had a pretty heavy duty sell off in the market as a whole with a spike in VIX, and yet they were not able to push prices below the low of that range. So this range is very important, and I've highlighted it and I've drawn it out here again just to reinforce it that I'm calling it a popsicle pattern. And now we have to see whether this popsicle will melt when we get the new set of earnings. So let's do a little more exploration. Now, this chart bothers me a little bit. So this is weekly data, and the indicator we have on is the TC para band indicator, which is basically this smooth adaptive band. with these accelerating parabolic style exits, and the speed is 1, which is the slowest speed available with this indicator. And you'll see that I've indicated the range or the popsicle range over here, and the trailing stop went up here, and we've hit the trailing stop on weekly data. So now two things are possible. Nvidia will rebound and essentially make new highs and negate this stop out function, or it could go lower. So essentially, I'm a little concerned that we hit the trailing stop. So in essence, I should be out of this trade if I'm just following the paraband indicator. Now here I'm using weekly data for Nvidia, and I've got the arch indicator, which is the adaptive regression channel. The default values are 50 weeks and plus or minus 1 standard deviation or plus or minus 2.5 standard deviations. So this is what we use to look ahead a little bit. So this is the same data as the previous slide. We have the arch indicator here, but I have extended each of the 4 lines all the way out to roughly January of 2027. And then this yellow rectangle roughly denotes the analyst price target range. So if you look through the literature or look through the web, you'll find that there are many different estimates, but they roughly follow in this range. What's interesting is that if we just use these regression fits and the regression indicator and just extend the lines out to, say, January of next year, which will be end of the current fiscal year for Nvidia, then we essentially end up in the same range as the analyst estimates. So our technical analysis is broadly agreeing with the range from analyst estimates, which are presumably from fundamental data. Now we continue with weekly data and the arch indicator. And here I've drawn 3 circles to show you that the prices have found support or resistance near the top or bottom of this channel. And then here I have the Fibonacci extension using the high and the low of the most recent activity. And that's projecting out to about 1.618 in terms of the end of the year target. And if I take the center line and project it all the way out there, what you'll find is that the number from the regression forecast is roughly in the range of 1.6 to 2 of the Fibonacci extension estimates. So the fact that our regression estimates and the Fibonacci extension are roughly converging is a good sign, which again reinforces the analyst forecast that even from technical analysis, we can get a range or a number that's similar to what the fundamental analysis is taking us. So talking of fundamental analysis, you can take the balance sheet data or the earnings statement that you get from the company and sort of build it out quarter by quarter and then use some way to forecast prices. So I did that at the end of the Q3 of 2025 all the way through Q3 or Q4 of 26, which is coming up in a couple of weeks or less. And I just did a forecast as 50 times the trailing 12-month EPS estimate. And I got data from CNBC just to get a rough check. And essentially, I'm sort of above where the market is. My forecast was above 220, say 223, 224. The market is at, say, 185 or something like that. And that's a little bit below what was even the low end of the CNBC or the CNBC average projection. So that just tells you the market can do whatever it wants. And in this case, it's running lower than what I might have estimated 2 years ago. Now, using just the revenue numbers and assuming a 40% compounded annual growth rate, and assuming that we are at, say, 213 billion for the end of the current fiscal year, I can roughly compute numbers of potential revenues going out to 2030. And then I'm just dividing the revenue by in billions divided by 1.2. So there's some zeros that I've left out here to kind of get a scale for what the closing price might be. So in essence, if you just look at sort of a stock price deflator where I'm just reporting the earnings as 213 instead of 213 billion to get the stock price, I can estimate with this method a price that's, say, near $700 at the end of 2030. So again, if you're a long-term investor, you need some idea, some guidance on what the price might get to, say, by the end of 2030. And of course, it doesn't mean that it'll be a straight line up. There'll be lots of ups and downs, and who knows what Nvidia is actually going to do. However, since all we can do is use the fundamental data and make some guesstimates as to what the future might bring, this just gives you a calibration for potentially what the price might be at the end of 2030 if you wish to be a long-term holder of Nvidia. So in summary, the price projection for a year from now, that's January of 2027, is somewhere in the ballpark of $250. And we can get there by using analyst forecasts. You can look at option implied volatility, and there are public websites that do that, or you can look at linear regression. So combining these three things, assuming that the world continues to function normally, whatever that means, it's reasonable to expect a price of around 250 or maybe higher a year from now. Of course, there's no guarantee we'll actually get there. This just gives us some talking point. So we're back to the Popsicle Candlestick Pattern that we started out with. This is what happened at the result or at the end of the last earnings announcement. And now we are sort of in the middle of the trading range. So it's a decent probability that we could go back and retest the bottom of the trading range, which has held up quite well. Or eventually the earnings kick in, we'll have to go through the top of the trading range. So the big question is, when will the popsicle melt? And the short answer is just watch the charts. Thank you for listening and have a great day.